Billions of dollars are being poured into the F-47 fighter jets while the economy and politics are in turmoil. What is going on? Trump announces F-47 jet. In a recent press conference, the president unveiled the development of the F-47 jet, a replacement for the F-35.
The F-47 will be the most advanced, most capable, most lethal aircraft ever built.
This is part of a broader strategy to enhance military power, with hopes of making the U.S. the leader in military technology. However, the cost of this project has raised concerns among the public. The U.S. currently spends a staggering $800 billion per year on defense, while millions of citizens are suffering from budget cuts to social welfare programs. This has led many to question whether military projects are truly worth the cost when citizens' lives are not being prioritized. And with wars and international tensions still ongoing, can the U.S. maintain a strong economy while pushing forward with defense projects like the F-47, U.S.-Canada relations, and the Conquest Statement? The president recently stirred controversy by calling the U.S.-Canada border an artificial divide and even expressing a desire for Canada to become a state of the U.S. But is this strategy truly realistic in the current context? Canada is a major trade partner of the U.S., with bilateral trade reaching over $600 billion annually. Moreover, Canada plays a key role in international agreements and maintains an independent foreign policy. Could this conquest push lead to a positive relationship between the two nations, or will it spark major tensions in the region? Regardless, Canada's response to these statements has been crystal clear. Increased defense, cooperation with European countries and Australia. Additionally, Canada is focusing on strengthening alliances with other allies like Japan and South Korea to safeguard its strategic interests in the region. This could complicate relations with the U.S. if these strategies aren't closely aligned. In the age of globalization and international security threats, shifts in the relationship structure between these two countries could have far-reaching impacts on North America and the world. Support for King Charles and the monarchy. In a surprising move, President Trump expressed his admiration for King Charles and the idea of a monarchy, even suggesting that the U.S. joining the Commonwealth and accepting King Charles as a leader would be a great choice. But is this a joke? Or is it a signal of a deeper reconsideration of the U.S. leadership structure? The Commonwealth currently consists of 56 countries, and joining could shift the international relations landscape of the U.S. But this would mean giving up some sovereignty. Furthermore, joining the Commonwealth would require the U.S. to accept the leadership of a king, which could contradict the democratic principles that the nation has always upheld. While this idea is controversial, it reflects a shift in how the role of the U.S. on the international stage might be perceived. If the U.S. were to seriously consider joining the Commonwealth, it could lead to significant changes in diplomatic relations and impact traditional alliances. Deportation and leadership power. President Trump recently discussed mass deportations without adhering to legal procedures. This could have serious consequences for the U.S. legal system, where the rights of citizens and immigrants are typically protected. A hardline policy could create tensions among social classes and increase opposition from citizens' rights groups. Moreover, without comprehensive solutions in areas like education, employment, and integration, these measures may only serve as temporary fixes and fail to address the root causes of immigration issues in the U.S. Could these decisions by President Trump bring about a positive change for the U.S. economy and international relations, or are they just controversial steps? Stay tuned to find out more.
President Trump is vowing to buy a Tesla after the company's stock plunged.
Extend its record-losing streak to 9 straight weeks, dating right back to the inauguration. And that, plus protests at dealerships around the country, is even getting the White House's attention.
Tesla has just witnessed $135 billion vanish, dropping from $770 billion to just $635 billion. Can the company bounce back as tariffs rise? Competitors threaten. And Elon Musk's controversial statements continue to push Tesla into a tough spot. First, we need to address the trade tariffs imposed by the Trump administration. These tariffs have increased the cost of production for Tesla, especially with parts imported from Europe and China. This leads to higher car prices and adds pressure on Tesla to maintain competitive pricing, particularly with models like the Model 3 and Model Y. With inflation rising and living costs climbing, Owning an electric vehicle has become more difficult for many American families. Both car costs and operating costs are going up, and this will undoubtedly affect consumers' decisions when choosing between electric cars and traditional vehicles. Can Americans continue to support Tesla in this environment, Ike? Tesla isn't just facing tariffs. It's also up against growing competition from major automakers like Volkswagen, Renault, and Stellantis. These competitors are heavily investing in electric vehicles and expanding their product lines. Volkswagen, for example, has announced plans to become the largest electric vehicle maker in the world, offering new models at more affordable prices with features that rival Tesla. This means consumers will have more choices when it comes to buying electric vehicles, and Tesla may no longer be the only option. Especially in Europe, where Tesla products are facing strong competition from local brands. Consumers might shift toward other brands offering more competitive pricing and better after-sales service. Not just tariffs and competition, but Tesla's financial situation is also showing signs of decline. How will these issues affect the stock market and the U.S. economy? Let's analyze it. In the past few months, Tesla's stock has dropped by over 53%. A clear sign of declining confidence in the company. On March 14th, Tesla's market value dropped from $770 billion to $635 billion, a significant decrease. This is largely due to factors like tariffs and increasing competition. As investor confidence falls, large financial institutions may pull out their investments, which could lead to a cash shortage for Tesla. This will directly affect the company's ability to produce and distribute cars, reducing supply and raising car prices. Consumers will face higher prices for Tesla products if the company can't maintain a competitive pricing strategy. With rising inflation and continuous increases in raw material costs, automakers, including Tesla, are facing escalating production costs. This could make electric cars less appealing than before, especially as competitors like Volkswagen, BYD, and NIO offer products at more competitive prices. American consumers will face higher car prices, while it becomes harder to access electric vehicles. Meanwhile, the rise of other electric vehicle brands might make consumers feel they can find alternatives at better prices, diminishing Tesla's popularity. To understand why Tesla is in this crisis, let's go back to the previous episode, where these factors began pushing the company into a difficult situation, and everything quickly spiraled out of control. Market in turmoil. Fox News turns away. What is happening to America's economic trust? What would you think if I told you? Even one of Fox News' most loyal hosts no longer believes in the White House's explanations. And this happens right when over $2.3 trillion evaporates from the stock market, while the 401k retirement funds of millions of Americans are sharply declining. Maria Bartiromo and a rare disappointment. In the conservative media world, Maria Bartiromo is a familiar name. She regularly defends Trump's policies even when public opinion disagrees. But this time, things are different. When the press secretary appeared on air to explain tariffs, Bartiromo was no longer patient. She fired off a series of questions.
First thought it was just about trade. Then they thought it was just about fentanyl. Then after that, we talked about, well, maybe it's currency manipulation, and maybe it's now you're talking about food testing.
The question seems simple, but it exposes a bigger issue. A lack of consistency in economic policy explanations. Not just her, many loyal Fox News viewers are starting to feel exhausted. They're no longer sure if this is a long-term strategy or just spontaneous justifications. Stock market plummets and 401k fears in just 30 days. The S&P 500 dropped more than 7%, equivalent to $2.3 trillion wiped off the market. The Dow Jones Index also fell by nearly 1,500 points, the biggest drop since the beginning of the year. More important is the public reaction. Millions of Americans checked their 401k accounts and saw their retirement funds shrink by 5 to 15% in just a few weeks. Yet, on television, the White House spokesperson still asserted, "This is not a tax on the people. Tariffs are a way to protect America from trade abuse." But the reality is different. Importing businesses are the first to be taxed. And then they pass that cost onto product prices, meaning consumers still pay more. Fox News. From unity to division. Since Trump entered politics, Fox News has been his strongest backing force. But now, voices within the network are no longer united. Some hosts try to calm the public by saying the market is correcting itself after being overinflated for too long. Others praise Trump's economic team as people who understand currency deeply. But there are also those like Bartiromo who can no longer contain their doubts. She bluntly asked why policies keep shifting reasons, causing both businesses and the public to be uncertain about how to plan. This is the most dangerous thing for an economy, a lack of direction. Politicians dodge. The people get no answers at multiple town hall meetings. Citizens raised direct questions. Why cut taxes for the rich but slash health insurance and social benefits? Why are living costs rising while we still haven't received any concrete support? The common response from politicians is silence or absence. Many Republicans choose to avoid facing these sensitive questions, and that only increases the loss of trust. Latest polls show Trump's economic approval rating is only at 47%, even lower than his own level in 2017. Optimistic statements versus reality checks. Trump remains unwaveringly optimistic. He emphasized,
I think if I didn't get elected, our country would be finished to start off with. And I think now that I did get elected, I think we're going to have the strongest economy in the history of the world. And I had that economy in 4 years with all the...
But when we look at the current reality, inflation is slowing but still unstable. Food prices, car insurance, and electric bills continue to rise. GDP growth is stagnant, below 2%. The public begins to ask, where exactly are we? And is the promise to make America great again becoming increasingly distant? Don't take your eyes off the screen, because what no one has dared to say about the economy is coming up next. Tariffs were meant to be a shield protecting the U.S. economy, but instead of creating an advantage, they have triggered a financial earthquake. In just one day, $4 trillion vanished from the U.S. stock market. Businesses are struggling, investors are panicking. But what exactly caused this disaster? The trade war hasn't just impacted production. It has ignited a crisis on Wall Street. Major tech giants Apple, Nvidia, and Tesla, all heavily reliant on global supply chains, became the first casualties of the sell-off. NASDAQ, the index representing the tech sector, plunged 4%, one of the sharpest declines of the year. Apple, with a market cap exceeding $2.7 trillion, saw its stock drop 6.3%, erasing over $160 billion in value in a single trading session. Nvidia, the leading AI chip producer, lost 7.8%, wiping out nearly $180 billion in market capitalization. But the hardest hit was Tesla, whose stock plummeted 9.2%, slashing $125 billion from its valuation in just one day. The sell-off didn't stop there. Microsoft, Meta, and Google also saw losses between 5 to 7%, wiping out another $350 billion in market value combined. Analysts warned that if the situation worsened, this could lead to a tech bear market, where values keep declining for months. The collapse of the tech sector rippled across the market, triggering a chain reaction of investor panic. Beyond tech, the airline industry and hedge funds were also caught in the storm. Delta Airlines, one of America's largest carriers, announced a 50% cut in profit forecasts due to rising fuel costs from Canadian tariffs. Instantly, Delta's stock plummeted 14%. Marking its worst drop in 5 years. American Airlines and United Airlines also took heavy hits, with stock prices tumbling 11.2% and 9.8%, respectively. The prolonged uncertainty led to a mass exodus from hedge funds. Major investment firms like BlackRock, Vanguard, and Citadel engaged in a massive sell-off, liquidating stocks at the fastest pace in 2 years. A staggering $240 billion was pulled out of the market in a single day, amplifying the Wall Street sell-off. This triggered a domino effect across the financial system, as investors rapidly lost confidence in the administration's economic policies. The collapse extended beyond tech and airlines, shaking the entire U.S. financial system. Major banks like J.P. Morgan Chase, Goldman Sachs and Bank of America each saw declines exceeding 5%, driven by fears of an impending recession. The S&P 500 dropped 5.7%, marking its largest single-day loss since the 2020 pandemic. The retail sector, already under pressure from rising costs, was hit hard by tariff-induced inflation. Walmart lost 12% in value, wiping out $56 billion in market capitalization. Amazon fell 9% as consumers tightened spending amid growing recession fears. Even cryptocurrency markets, often considered a safe haven, weren't spared. Bitcoin dropped 5%, sinking to $42,000 as investors pulled out of risky assets. The entire crypto market saw over $200 billion erased in just 24 hours. The bond market also sent alarming signals. The 10-year U.S. Treasury yield fell to 4.22%, signaling that investors were fleeing stocks for safer assets. A classic sign of an approaching recession. This wasn't just a short-term market shock. It was a full-scale confidence crisis threatening the stability of the U.S. economy. A single, flawed trade policy and $4 trillion vanished from the U.S. stock market overnight. America's economy is now fighting itself rather than its global competitors. The question remains, if $4 trillion evaporated in just one day, what happens next? Mexico chooses silence, while Canada responds forcefully. Which strategy is the key to success when confronting Trump in this trade war? Canada, under the leadership of the new Prime Minister Mark Carney, has officially taken a hardline stance against U.S. tariffs. After Trump imposed a 25% tariff on steel and aluminum imports from Canada, Ontario immediately retaliated by raising tariffs on electricity exports to the U.S.
President Trump's trade war is heating up. The Canadian province of Ontario says it will slap a 25% surcharge on electricity exported to the U.S. Let's go to CBS News correspondent Chanel Call. Chanel, great to see you.
This put pressure on important states like New York, Michigan, and Minnesota, forcing Trump to respond. Mark Carney, who is expected to bring a new wave for Canada, declared that the country could no longer trust the U.S. and must protect itself.
We will never, ever bow down to a bully. Canadians will always stick together. And we won't stand by as tariffs hurt our workers and their families.
And it's not just Carney. Ontario Premier Doug Ford is also unafraid to confront Trump. This situation shows a shift in Canada's approach. They are no longer a silent ally, but a powerful partner capable of ramping up retaliation strategies when necessary. The 25% tariff that Ontario imposed on electricity exports to the U.S. could cost the U.S. economy billions of dollars. Specifically, New York State relies heavily on electricity from Canada. According to data from the U.S. Department of Commerce, the steel and aluminum tariffs reduced Canada's exports to the U.S. by $4.6 billion in 2018. Canada and Mexico are showing two very different strategies in response. Mexico, under the leadership of President López Obrador, maintains a discreet diplomatic strategy. Instead of confronting directly, Mexico has chosen to negotiate, yield, and remain silent to minimize conflict. Specifically, Mexico does not react as strongly as Canada, but instead opts for secret negotiations and one-on-one agreements with the U.S. In contrast, Canada has decided not to remain silent and to take bold action from the start. Mark Carney believes that the silence strategy towards Trump is not the solution. His prominent statement resonated strongly in the international community. If we stay silent, Trump will continue to disrespect us. That's why Canada chose to confront publicly, retaliate, and demand respect from the U.S. Although Mexico maintained a silent approach, data from the World Trade Organization, WTO, shows that Mexico still maintained a stable trade relationship with the U.S. through discreet negotiations. Doug Ford, the Premier of Ontario, played an extremely important role in dealing with the U.S. when Trump raised tariffs on steel and aluminum. Doug Ford didn't hesitate to increase electricity tariffs for U.S. states, particularly New York, Michigan, and Minnesota. This was a strategic move to make the U.S. reconsider its decision. Is that this move made Trump rethink. U.S. trade representatives had to meet with the Ontario government for negotiations. This was a clear shift in how Trump treated Canada compared to Mexico. This proves that Canada's tough strategy was not in vain. Canada, under the leadership of Mark Carney and Doug Ford, has sent a clear message. If you want to respect us, we will fight for that. This trade war will continue, but Canada and Mexico could gain the upper hand if they continue to apply smart and bold strategies. Trump will find it difficult to maintain his bullying strategy in a globalized world, where countries can come together to counter unfair policies. Stay tuned, because the upcoming developments will leave you shocked.